Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Kevin Mahn, President and Chief Investment Officer of Hennion and Walsh, to discuss portfolio positioning and where the investment opportunities are. Kevin, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. It's good to be here.
And Kevin, let's start with the new $2.25 trillion infrastructure spending plan. There's a lot of opportunities there.
Yes, absolutely. Finally, we've heard the details now of the much anticipated infrastructure spending bill, and it appears as though it's going to be the largest bill from a public financing perspective in nearly 5 decades. And there are certain areas that bill is targeting, once again, assuming that it is ultimately passed, that we believe, Jill, creates investment opportunities. On the equity side, there are certain sectors that we anticipate benefiting from those infrastructure projects. We know that they're talking about repairing roads, bridges, highways. We know that they're going to expand broadband access, which actually dips into the 5G area. And all of that creates opportunities that we see in areas such as telecommunication services, industrials, materials, and even energy. So there are potential benefactors on the equity side, but don't neglect the opportunities on the fixed income side either, as we know that the majority of infrastructure projects in our country are financed not only by tax increases as are currently being proposed, but also by municipal bonds. So if in fact taxes go up and in fact more municipal bonds are issued to finance these projects, we believe that those bonds are going to be snapped up by tax-conscious, yield-hungry individual investors.
We spoke in the first quarter about 3 potential rotation trades of 2021. How are they performing? Are there any updates to the thesis there?
Certainly. In terms of those 3 potential rotation trades, Jill, once again, they are the rotations from U.S. large cap outperformance to smaller cap outperformance, from U.S. Stock outperformance over international stocks, and finally growth stock outperformance over value stocks. As it stands right now, thus far through the first quarter of 2021, 2 of those rotation trades are taking place and are starting to cement themselves, as we're seeing small cap stocks significantly outperform U.S. large cap stocks, although U.S. large cap stocks are still performing relatively well, up over 7% thus far this year on a total return basis. The second rotation that's really cementing itself is value over growth. You may recall last year, Jill, that growth stocks outperformed value stocks by nearly 36%. Thus far in 2021, the tables have turned and values outperforming growth by over 10%. And some of those infrastructure areas that I highlighted earlier are those traditional cyclical value-oriented areas that should benefit as well. The only rotation that's really not taking place thus far this year is that U.S. to international stock outperformance. Although I'll remind all of your listeners that last year, emerging market stocks did outperform U.S. stocks, at least as it relates to the S&P 500 and the Dow. So we still believe there is a worthy consideration for adding international stocks, both developed markets and emerging markets, into a globally diversified stock portfolio.
And finally, Kevin, how should investors be positioning their portfolios in the face of potential inflation and an expanding economy?
Absolutely. I think it's clear at this point in time that we are within a period of economic expansion. We've rebounded from the initial devastation that took place to the economy and to the stock market at the onset of the COVID-19 pandemic, and now we're in the beginning stages of a multi-year economic expansion. Generally, economic expansions are also confronted by inflationary pressures and rising interest rates. Remember that the Fed is trying to reflate the U.S. economy. They're comfortable with inflation hovering above 2%, their target rate for inflation, for some period of time until the economy fully recovers from, once again, the COVID-19 pandemic, until we get to a closer point of full employment, which is 3.5%, which we saw back in March of 2020. So how do you position yourself? Well, you look for those areas of the market that have historically performed well on a relative basis during economic expansions. Obviously, the best inflation hedge that we know of here at Hennion and Walsh are equities, although gold and other commodities can be a consideration as well. And then on the fixed income side, generally higher yielding debt performs better than investment grade debt, at least from a growth perspective during periods of economic expansion. Convertible bonds are another area to consider, preferred securities, senior loans. So there's a large number of areas for investors to consider to take advantage of what we will be to be an expanding economy over the next 2, 3, 4 years.
All right, Kevin, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.